The world of cryptocurrency has witnessed a revolutionary shift with the introduction of Bitcoin ETFs, exchange-traded funds. These financial instruments have opened a new avenue for investors to engage with Bitcoin, the leading cryptocurrency, in a regulated, simpler, and more accessible format, exploring their types, the process of investing, regulatory journeys, advantages and disadvantages, and their historical context. What is a Bitcoin ETF? A Bitcoin exchange-traded fund is a financial product that tracks the price of Bitcoin, allowing investors to trade shares on traditional stock exchanges. This innovation provides a bridge between the traditional financial markets and the burgeoning world of cryptocurrencies. By offering a regulated and secure channel for Bitcoin investments, ETFs have enhanced investor confidence and compliance with established financial standards. Types of Bitcoin ETFs. Bitcoin ETFs can be broadly categorized into two types. Spot Bitcoin ETFs. These ETFs hold actual Bitcoin and aim to replicate its market price. They provide direct exposure to Bitcoin's price movements, offering an alternative to the complexities and risks of owning the cryptocurrency directly. Bitcoin futures ETFs. Differing from spot ETFs, these track Bitcoin futures contracts. They do not directly track Bitcoin's price, but are based on futures contracts traded on exchanges. The introduction of Bitcoin futures ETFs was a significant step, as it marked the SEC's acceptance of Bitcoin into a more traditional investment framework. Investing in Bitcoin ETFs. Investing in Bitcoin ETFs involves selecting the right ETF based on factors like fees, share price, and the assets in which the fund invests. The investment process is straightforward, requiring an investor to navigate their brokerage account, enter the ETF's ticker symbol, and place a trade. For instance, BITO, a Bitcoin futures ETF, is traded like a stock. Regulatory journey in the United States. The road to regulatory approval for Bitcoin ETFs in the U.S. was fraught with challenges. Initially, the SEC expressed reluctance to approve these products due to concerns about the unregulated nature of Bitcoin, its volatility, and the potential risks to investors. However, in January 2024, the SEC granted approval to several Bitcoin ETFs, marking a historic shift in the regulatory landscape. This approval included well-known entities like Grayscale, Bitwise, and Fidelity, symbolizing a significant development in the integration of cryptocurrency into mainstream financial markets. Advantages. Accessibility. Bitcoin ETFs simplify the process of investing in Bitcoin through traditional brokerage accounts. Regulatory oversight. They offer a regulated investment avenue, enhancing investor protection and compliance. Simplicity and security. Investors can gain exposure to Bitcoin's value without dealing with the complexities and security risks of direct ownership. Diversification. They allow investors to diversify their portfolio by including a cryptocurrency asset class. Disadvantages tracking error. There can be discrepancies between the ETF's share price and Bitcoin's actual price movements. Regulatory risks. Changes in regulations could impact the legality, trading, and valuation of Bitcoin ETFs. Custodianship risks. Large Bitcoin holdings in ETFs are potential targets for cybercriminals, posing security risks. Roll expenses in futures ETFs. The cost of rolling futures contracts can impact the fund's overall performance, particularly relevant for Bitcoin futures ETFs. Historical context. The concept of Bitcoin ETFs dates back to 2013, with the Winklevoss twins filing the first proposal. However, The SEC repeatedly rejected Bitcoin ETF proposals until the landmark approval in January 2024. This followed the introduction of the first Bitcoin ETF on the Bermuda Stock Exchange in September 2020, and subsequent launches in Canada, Brazil, and Europe. The approval by the SEC in 2024 was a watershed moment, signaling the growing acceptance and integration of cryptocurrencies into the global financial system. Bitcoin ETFs represent a significant development in the world of cryptocurrency and traditional finance. They offer a regulated, simplified, and accessible means for investors to gain exposure to Bitcoin. While they come with their own set of risks and considerations, the regulatory approval and growing interest in these financial products underscore the evolving landscape of investment and the increasing mainstream acceptance of cryptocurrencies. As the cryptocurrency market continues to mature, Bitcoin ETFs will likely play a pivotal role in shaping the future of digital asset investments.